Welcome to the Chart of Accounts topic. In this session, we will discuss the Chart of Accounts structure and the effect of standard processes on the Chart of Accounts. Imagine that you are implementing SAP Business One at a new customer. You discuss with Maria, the accountant, the effect of the sales and purchasing processes on the Chart of Accounts, and as a result, on the financial reports. Maria says that this structure will help her in presenting the financial reports in a clear and structured way. How are the business partner master data balances presented in the Chart of Accounts? The business partner master data balances do not appear in the Chart of Accounts. The receivable and payable control accounts accumulate the customer and vendor transactions in their balances. For example, when you post an AR invoice, the accounts receivable account related to the customer is used, in addition to the customer account. Therefore, the Chart of Accounts presents the complete financial status of the company, as well as the financial reports, for example, trial balance and balance sheet. The Chart of Accounts is an index of all GL accounts used by your business. Every GL account has an account code, an account description, and additional information that determines the functions of the GL account. When you implement SAP Business One, you define, or import, the Chart of Accounts, and default GL accounts to be used when transactions are created in the regular business processes, sales, purchasing, inventory and more. The documents in the sales and purchasing processes create automatic journal entries that are registered in the journal entry file and affect the account balances. The account balances are also affected by manual journal entries and other accounting transactions, such as the period-end closing process that transfers the balances of the profit and loss accounts to a balance sheet account. The Chart of Accounts is organized by drawers and levels. Let us look at this example of a Chart of Accounts. The Chart of Accounts varies according to the company's localization. The organization of the Chart of Accounts follows Generally Accepted Accounting Principles, GAAP. The Chart of Accounts window organizes your accounts by drawers. In the General Ledger, we distinguish between balance sheet drawers and income statement drawers, also called profit and loss. Let us start with balance sheet accounts. The first three drawers, assets, liabilities, and equity, or capital and reserves, typically hold the balance sheet accounts, such as the sales tax and the accounts payable account. The bookkeeping balance of these accounts is kept from one fiscal year to the next. The balance sheet accounts reflect the monetary value of the company, stock, assets, debt, etc. Then, we have the profit and loss accounts. The next five drawers, revenues, or turnover, cost of sales, expenses or operating costs, financing, or non-operating income and expenditure, and other revenues and expenses, or taxation and extraordinary items, typically hold the profit and loss accounts, such as the income or expense accounts. The bookkeeping balance of these accounts has to be cleared at the end of each fiscal year during the period-end closing process. The profit and loss accounts reflect the changes in the company value, such as, when you sell stock, the cost of goods sold account is affected and increases revenues. Lastly, we have two optional purpose profit and loss drawers. These drawers have no fixed predefined purpose and in most cases are empty, dependent on localization and Chart of Account template. If needed, each company can designate the additional drawer to a certain accounting area. Financial reporting requirements drive most of the initial settings and configuration decisions in the Chart of Accounts. The different financial reports run on the account balances relevant to a selected date range and present them according to their drawer level. The balance sheet summarizes the value of the business assets, liabilities, and owner's equity accounts. The trial balance displays for each account, beginning balance for a particular period, all of the debits and credits, and the ending balance. The profit and loss statement is determined after the end of the fiscal year. The balances of the expense accounts will be subtracted from the balances of the revenue accounts to come up with the profit or the loss for the fiscal year. A chart of accounts arranges a company's general ledger accounts in a hierarchical structure. The top level in the structure, Level 1, consists of sections or groups for different type of accounts, assets, liabilities, capital and reserves, turnover, and so on. The system displays the section as a cabinet drawer. Each drawer has a section title. You can change the drawer title if required. The updated name will then appear in the financial reports. You can define up to 10 levels. While Level 1 is the drawer level, the following levels can be used as titles for grouping the accounts and for active accounts. It is recommended to organize your accounts by level in a logical fashion appropriate to your localization's financial accounting and reporting processes. The system displays titles in blue and active accounts in black. Accounts defined in the GL account determination, default accounts, are displayed in green. A title account summarizes all the balances of the active accounts underneath it. Let us look at this specific example of chart of accounts that contains 5 levels. Levels 2 through 4 can contain either active accounts or titles that combine several active accounts. Level 5, in this example, contains only active accounts. Note that only active accounts can be posted to an SAP Business One. Financial reports display both title and active account balances. To have a clear and structured view of the company's financial status in the report, it is recommended to define all active accounts in the same level. In our example, all active accounts are defined in Level 5. In the chart of accounts, there are many definitions related to the account. We will now cover some of them. Maria, the accountant, has added a few new accounts to record various expenses and revenues related to a big summit they are about to attend. The image shows a travel expense account that Maria added. First, Maria chose the account currency. Each account in the chart of account can have a different currency or can be set as relevant for all currencies. Refer to the course topic, Working with Currencies, to learn more about account currencies. Maria confirmed that the new account currency is local. Then she linked it to a financial project. This enables Maria to generate financial reports filtered for this project. Maria entered a new financial project code that was created for this summit. Lastly, Maria chooses account details to open the GL account details window of the Summit 17, travel expense account. In the active field, she sets a period in which the account should be active, starting in March and ending by the end of the year. With this approach, she makes sure no further transactions can be recorded for the account next year. Note that by default, all accounts are active without period restriction. Another useful definition on the GL account details window is the account balance allowed. Maria opened the GL account details window to enter minimum and maximum balances allowed for the petty cash account. Maria would like to make sure the account does not fall below a balance of 100 and therefore enters the value 100 in the From field. In addition, once the petty cash balance reaches 5,000, she wants to transfer the cash to the company's bank account. Therefore, she sets the maximum balance to be 5,000. Maria already defined a blockage validation in the document settings window, as shown in the image. Here are some key points to take away. The chart of accounts is structured of 2 types of drawers. Balance sheet drawers that typically contain balance sheet accounts. And profit and loss drawers, income statement, that typically contains profit and loss accounts. The different financial reports run on. The account balance is relevant to a selected date range. And present them according to their drawer, level, and type. A chart of accounts arranges a company's general ledger accounts in a hierarchical structure. The top level in the structure, Level 1, consists of sections or groups for different type of accounts. The system displays the section as a cabinet drawer. The following levels can be used as titles for grouping the accounts and for active accounts. Only active accounts can be posted to an SAP Business One. The chart of accounts contain many definitions related the account like account currency, related project, limited activity period, minimum and maximum account balance. You have completed the chart of accounts concepts topic. Thank you for your time.